Jim, we want to get over to Netflix earnings just crossing the wires right now and taking a look at how shares are trading after hours, off just about 3%. The big reason why we're seeing some pressure on this stock has to do with the forecast. The third quarter sales forecast lagging the street's estimates. Netflix seeing revenue of $8.5 billion. The estimate from the street was for $8.67 billion. But when it comes to the second quarter, the standout number for me is the paid streamer ads, as subscribers that they added during the quarter, 5.9 million in the second quarter, blowing past the street's expectations of just over 2 million, really showing that the crackdown on password sharing, offering a huge boost here for Netflix for its subscriber numbers. For the sales numbers for the second quarter, that came in at a slight miss, $8.19 billion. Estimate on the street was for $8.29 billion. When it comes to EPS, that was a big beat here from Netflix. But Soz, my two takeaways is that forecast. That's why we're seeing the pressure on the stock here after hours. But the subscriber beat, and by the magnitude of that subscriber beat, is certainly something to be a little bit encouraged about.
I'm going to take the other side of it.
Okay.
I guess I understand. I mean, I'm actually on your side. I get the market's reaction. When I'm looking at operating profit margin up year over year, 22.3 versus 19.8, instantly tells me their issue or their focus on wringing more profits out of their subscriber base is working. To your point, those net adds at 5.8 million, that is a huge number, telling, at least for me, that people are willing to pay and pay more to use Netflix. That was a concern, I think, coming into this Netflix quarter. Are people willing to pay and pay more to stay on the service? And last but not least, along those lines, 6% increase in the average paid membership. That is, I think, checks a lot of boxes on what has driven Netflix shares up year to date.
Yeah, we know a lot of that focus was on the average revenue per user and how big of a jump we would see given the fact that more people are spending here for the streaming service. Also, another thing in this note that's jumping out to me here is what Netflix said. While we continue to grow our reach, ads plan membership has nearly doubled since the first quarter, but it's off that small membership base. So they do see ad revenue helping Netflix, although saying that won't be material here for Netflix for at least some time.
Quick bonus takeaway, this quarter, that big beat on net ads, not good for Disney's streaming ambitions. That's how I read that as well.
All right, well, there, you've heard it here first. All right, well, let's get over to Josh Schafer with a closer look at how we're trading today and how we've traded over the last couple of years.
I wanted to take a little bit of a historical look there here and get into maybe a little bit of a discussion about a buy the rumor, sell the news that we might be seeing in terms of Netflix, because a lot of those headlines you guys were mentioning, I think overall maybe are good for the long-term investor story in Netflix. What I have right now is the 3-year. You can see how far beaten down Netflix was in 2022. It's been one of those stocks that we've seen rally in 2023, and I want to just take a little bit of a walkthrough of what we saw leading up to this earnings call. You remember CEO Reed Hastings out in early January. You saw a big jump there. Then you saw some of the rumors start to come out at the end of March, right? This is that the ad tier was going well for Netflix. You saw a big jump back in March on that. Then you fast forward to May and you start hearing more about that password crackdown. You hear the password crackdown starts going well. You also have that big rally that we've seen overall in tech. Netflix certainly caught up in that. Also, most recently, as we've seen this here, Netflix is considered to be maybe a winner if the Hollywood strike is to continue. Netflix has been picked up here. They have a lot of exposure to broad markets, to European markets, to Asian markets where they create movies. So maybe they'll benefit from an extended Hollywood strike with those actors and writers. So Netflix has been on quite a run this year, guys, up almost 62%. And I'm wondering if that's part of the reason maybe you're seeing a little bit of down action today. Certainly some profits to be taken, and something that I think we should be watching when we think overall about tech earnings this quarter. A lot of these companies have done very well to start the year. How do investors react to that when you think about maybe even a company like Tesla or some of these other companies that have seen stocks go up over 100% to start the year? How do investors react when they take in these earnings?